Greetings everyone. I'm Sibesh Kumar, Head of Key Accounts at IDFC Asset Management Company. Today, I would like to present our new passive fund, IDFC Nifty 100 Index Fund, wherein you can access India's largest companies under one roof. How this fund works is, all the stocks in the Nifty 100 Index are bought by the fund in the same proportion as the index. This is done with the aim to provide investors the opportunity to participate and benefit from the price movement of the index. The beauty of this product lies in the fact that just one trade provides you with exposure to all 100 stocks of the Nifty 100 index, essentially the highest market capitalized companies in India and at a very competitive price. If you were to invest in each stock individually on your own, you would need to shell out a lot more money and constantly keep rebalancing to align your portfolio with the Nifty 100 stocks. Now, why should you consider Nifty 100 index? The Nifty 100 index consists of the 100 largest companies by market capitalization, reflecting overall market conditions on Indian equity market. The index is well diversified across major sectors like financial services, information technology, oil and gas, consumer goods. Nifty 100 Index Fund is one fund that can meet needs of all different investor segments. If you are a beginner taking your first step into the world of equities, Nifty 100 Index can be the ideal stepping stone since it comprises the top 100 well-established and known businesses. Also, large cap can provide relatively more predictable returns versus mid and small caps. You can avoid the hassle of 1. Researching and selecting mutual funds since next year's winner cannot be predicted. 2. Rebalancing your portfolio in case you choose to manually replicate index fund. 3. Recreating the index with a high investment amount. Important to note here that if you choose to replicate the Nifty 100 index by yourself, you would require to invest rupees 1 crore. However, you can invest in the same index starting rupees 5,000 in lump sum and even rupees 100 by SIP via this fund. You may realize that some funds beat the broad market while some do not, and hence you can invest in a strategy that complements your portfolio of distinct investment theme with a large cap strategy aligned with the market movement. You may be confused between Nifty 50 or Nifty Next 50 or a combination of both for exposure to large cap space. However, Nifty 100 can be considered the most efficient way to gain exposure to Indian equity large cap universe. It is difficult to gauge which index or combination of indices will perform better in the future. If you fall in the fourth segment, that is in the retirement phase, pertinent to note that over the long term, equities have the potential to beat inflation and hence a relatively stable equity allocation via large cap index fund, that is Nifty 100 index fund, can be beneficial for you in your retirement phase. So with this, thank you all and wishing all the very best to investors for making the right and well-informed investment decisions. The fund is now live on Groww platform.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.